Good afternoon, Ben Rodney from the Noosa Mining Conference. I'm very excited today to be speaking with the CEO of Mitchell Services, Andrew Elf, a company personally that I've been invested in for quite some time and one that I follow with interest. Andrew, can you just give us an overview of your business and the drivers going forward?
Yeah, thanks very much for having me on, Ben. Look, Mitchell Services is a ASX-listed drilling company. We've got about 100 rigs in the fleet. We've got an increasing utilisation, moving into a stronger market. At the current time, we've got about 70-odd rigs running, and we ended last year with sort of just under 70. So year on year, the run rate's up. Very diversified company. We work in surface and underground metallurgical coal and surface underground gold and base metals. And predominantly Eastern Australia based, but also operations in South Australia and WA as well.
So just touching on your gold division, you made a really canny timing on an acquisition in that commodity last year. Can you talk through that a bit to us?
Yeah, we acquired a company called Deepcore down in Victoria, head office in Bendigo in November 2019, so coming up on a year now. And we really sort of saw that gold was going to have a good runway for a few years to come, we thought, and Deepcore, fantastic business, and certainly in the right position with that emerging Victorian gold story. Fosterville's a major client, Navarre's a client, and others are going to come on. That Victorian government is going to release more blocks sort of March next year, and they're a fantastic company. They're performing better than we expected, and we're very well positioned to now take advantage of that gold. And looking at revenue in 21, gold's going to be sort of 50% of our revenue this year, which is certainly up year on year.
Yeah, fantastic. I mean, it's certainly a hot sector at the moment. You guys are uniquely positioned. What should we be looking for as investors? I mean, you've got really strong cash flow now. Is it capital management? Is it more acquisitions? Is it just more of the same but more volumes? Or what are we looking for?
Yeah, I think more of the same with more volumes, absolutely. I think, the utilisation is good and heading in the right direction, and the pipeline is definitely strong. And I think we've got a really good year or two ahead of us in the sector. A lot of money's been raised. That's going to go into the ground from next year. Everyone's sort of doing their planning now and getting organised, and then next year it's going to start going into the ground. So I think the company's in the best shape it's ever been. The balance sheet's in good shape. Net debt to EBITDA is less than 0.5 or around 0.5, producing good solid cash flows. So we are in a position where we've paid a franked dividend the last couple of years, and we've got a strong balance sheet to acquire if something comes up, or to grow organically if those opportunities come up as well. So all in all, I think in great shape, and I'm looking forward to a good couple of years ahead.
Fantastic. Well, thanks very much for updating on the company, and certainly we've got a dollar price target on your share versus last traded price of around the 50s, I believe. So lots of upside there, and I'd urge you all to take a look. Thanks.